Welcome back. Well, the equity markets are largely flat, but one of the stocks in focus is Vedanta. Keep an eye out on that. The stock is now down almost about 4% and volumes are also picking up there. We'll try and get you more details on that, but that definitely is the chart of the moment. Almost 6% gone on Vedanta now. Let's shift focus to the commodity markets. Manisha is joining in. Manisha, what's the one commodity that you're looking at this morning?
Well, I'm looking at metals and, even as the month of January was a great one because we saw double-digit percentage gains there, the Fed clearly has given up a lot of those gains there. The strength in US dollar clearly is one of the reasons that is weighing on. We are looking at dollar index now trading at a 7-week highs at around 105, and that's weighing on many of these dollar-denominated commodities. The markets also are looking at the Chinese recovery, which has at best has been uneven. The numbers or the expectations in the month of Jan clearly seem to be going away now. There also is a build-up in inventories for many of these metals. That's weighing on. And the markets are dealing with expectations of a prolonged US restrictive policy. We also are looking at very strong US economic data, and that tells you that the higher Fed rates perhaps could become a possibility. And then it is also about liquidity declining as the US Fed continues to unwind its books. So take a look at the market prices then, and we have seen the copper prices trade at around 2-month lows. Aluminum prices have come off the 7-month highs that it hit on 25th of January. If you look at the Chinese production, that has hit a record high in the year 2022, up by nearly 4.5%. Iron ore prices also have eased from its 8-month highs. Here as well, we are looking at pollution concerns in China and the stock really building up right now. So off 8-month highs on this one, and the iron ore prices have now declined below $130 a ton. There is weak demand coming in from the steel mills, and that seems to be weighing onto those prices. Steel prices itself have come off its 8-month highs. Nickel is trading at around 3-month lows now, below $25,000 a ton. In nickel as well, the Indonesian production in the previous year gained up by nearly 50% to 1.58 million tons. So there is production now picking up, inventories building up, and the Chinese demand not even. All of that weighing onto the markets. And that chart clearly clears it for you, basically. So but the month of January saw nearly 10 to 15% of gains coming in across of these metal prices. In the month of Feb, you've seen prices decline anywhere between 6 to 12%. Steel is the only one which continues to trade in the positive for 2023, even now with that profit taking. But as you can see, zinc, aluminum and iron ore essentially have declined between 10 to 12%. Copper prices up 6% for this year now. But apart from that, Feb clearly hasn't been such a great month. And the markets do believe that the first half of March, the 15 days, also could see some more profit taking here.
Okay, thanks a lot, Manisha, for that. Let's get back to buzzing stocks now. Indiabulls Real Estate.